Yes, welcome everyone to the session. Thank you for taking the time out. So this is the next in the series of Innovation Broking's series of events to support our clients and various sectors we work in. So today we're very lucky to be supported by one of our insurance friends in Ecclesiastical. We're also very lucky to have Jacky Cantani from DWF. I'll let Jacky give her own introduction, but she's very much the highlight of the session. We appreciate, although Angus and I might find insurance interesting, others not so much. So we really want this to be a practical session and really to share some stories and examples of recent incidents, hopefully not to scare you too much. So just by way of introduction, we have muted everyone, so we will give you an opportunity to speak during the Q&A at the end of the session. You should have a chat function, which is at the bottom, so if you have got any burning questions, I will be keeping an eye on the chat function throughout, and we'll stop at sporadic points just to look at those. So if you've got any burning questions you don't want to forget, please do make a note in the chat function, and we've allowed some time at the end of the session. We have allowed an hour and a half, just in case there's time for questions. If we finish slightly earlier, we will do so and give you that valid time back. So yes, hopefully, if anyone's got any IT issues, please do drop me a note on the chat, as I won't be available on my email. So I think that's covered off most of the housekeeping. Just for your reference, the session is being recorded. None of your faces or names are to be seen, but we will share this on our social media platforms for other clients that couldn't make today's date. So just for your reference. And if anyone wants a copy of the session, we can email that at a future day. So we've got some clients on here that aren't clients of innovation or ecclesiastical, so just by way of a short introduction, I'm Jonathan Taylor, Director of London for Innovation Broking and Head of Charity and Care. So Innovation Broking, for those of you who don't know, is a top 100 broker based out of London and Watford. We very much specialise in three sectors. So we've got our commercial department looking at sort of SME, top-end commercial. We look at a lot of tech organisations, and then I head up the charity and care. So you can see an example on this particular slide of some of the types of organisations we look after. So some of the sort of largest brands in the country in terms of charities, Comet Relief, Prince's Trust, etc., and then looking in care and special schools as well. Just for reassurance that anyone that isn't in those sectors, this webinar, although some of the examples will be charity specific, the topics covered can cover any single sector and any single organisation. So although it's brought to you by myself and our team, it's very much applicable for all sectors, just to put your mind at rest there. So that picture is a little bit old, so I probably need to update that. I'm still clinging on to the hair, unfortunately. And the other good looking gentleman there is our MD, Howard Pearson, that's also on the webinar as well. You might notice there on the bottom right, that's our website. So again, we can send the link following that, because there's lots of great content on there which is accessible for clients and non-clients as they like. So we've got a series of webinars, videos. We're actually doing a series of short videos, sort of insurance in under 5 minutes for particular topics. And one of those is actually cyber. So Howard has produced a video in under 5 minutes on what is cyber insurance and what types of risks that would cover. So it might dovetail quite nicely as a follow-up to this session, which is available on the website, or we can send you that short video which you can watch on your laptop or handheld device. This slide just shows some of the examples. If you keep an eye on our website or follow us on LinkedIn, you'll see lots of various content that should be applicable and hopefully help you in these really. So what I'm going to do, I'm going to pass straight over to Jacky. Hopefully we've got the technology sorted there in terms of the speaker. Always the way we had everything planned and set up, and then there was a bit of a hiccup just before, so apologies. I think we're good to go. I'm going to pass over to Jacky, let Jacky be the main keynote speaker for the session. So just for background on Jacky, Jacky is ex-Met Police and now head of crime, financial crime at DWF, or the sort of what Jacky doesn't know probably isn't worth knowing, and she's really going to educate you guys hopefully on some key risks in the sector at the moment. So over to you, Jacky.
Okay, thank you. As you are aware, my name is Jacky Cantani, and I think that today I'll be taking you through both internal fraud and external fraud. Next slide, please. And here, I think on the right, you can see that it says that charities believe they're most vulnerable to internal fraud 21% and external fraud 20%. So you can see that it's high on the list. Next slide, please. The table on the side is an extract from the Charity Commission Fraud Report and outlines the most common frauds. So you can see that mandate CEO fraud being your most common external threats, and abuse of position being the internal threat. Next slide, please. So firstly, I'll start with the external threat. Next. In my experience, charities are targeted generally because they are smaller than most businesses, will have limited resource to implement additional checks for fraud, and are generally trusting of others. There may also be insufficient training, recurrent fraud trends and MOs, and staff generally have a full workload. The size of the charity is not always small, as there have been some larger charities targeted, but this does require more planning and effort by the fraudster, rather than an email followed by a phone call, and they can be calling from anywhere in the world. So on the slides, you'll see that I've put up the two main threats at the moment. So the first one is business email compromise, often referred to as CEO fraud, due to the impersonation of a high-level executive. This has been around for a little while, but fraudsters are definitely getting more sophisticated in their approach and becoming even more convincing. There are two methods they generally use. One is an email of a top exec could be hacked, or he may have been fished, or even smished, which smished, if you don't know, is by text message, to obtain his password to his email account. Or they will, the fraudsters will email from a very slightly different spelt domain name, usually off by one or two characters, and they will request an urgent payment to a supplier or to complete a contract, and then they'll provide bank details and say, if it doesn't go through today, the whole contract's lost, and they make this massive urgency. The fraudsters also, for CEO fraud, we generally put a bit more effort into these, as there's a lot of money at stake. They would phish other members of the organisation, and that's called spearfishing, which is targeted phishing of specific people, so that they understand who has the authority for payment, and potentially to even choose a time when that exec that they're going to impersonate may be at a conference, tied up elsewhere, so nobody can contact them, so they can't check whether it is actually them or not. Some of these frauds have actually been in the millions of pounds. So moving on to payment diversion fraud, sometimes called mandate fraud, but commonly called Friday afternoon fraud. Again, due to the urgency, it must get done before the weekend. This is probably the more common one that you'll see, where a supplier's email has been hacked or spoofed, and they'll provide an invoice with updated bank account details. Sometimes they provide an excuse as to the change of bank account, or they're having problems with HSBC, they've frozen their account, etc., and they've had to move account. Other times they just hope that you don't notice and pay this as a one-off payment. I think a lot of the time it will depend on whether they're an established supplier or not. If they are established, they will also chase you to...
Oh, sorry, Jacky, I think we just had a
bring in from the actual suppliers themselves. One thing to note, though, is that payment diversion fraud and APP fraud, which we haven't discussed, which is automated push payment fraud, is actually being tackled by the banking industry due to confirmation of payee that came into effect in 2020. However, one real important thing to note is that banks' payments are generally not covered, and also not all banks are signed up to this. Therefore, only the banks participating will be able to check names on the accounts actually match. This would often suggest that other banks that are not participating will be targeted for new accounts, And any payment diversion fraud will probably go through these because they cannot check that name. So keep an eye out for the non-traditional banks being used, which could be a red flag if a change of bank details is requested. Next slide, please. Right, this is just for fun. Let's see how quick you can spot the difference. The ones on the left are the correct ones. The ones on the right are the spoofed ones. Okay, so the first one, you can see that the extension, the correct extension is .gov.uk, but they've put .co.uk. For the second one, you'll see that it's Red House Developments, and they've just dropped the S, Red House Development. And then on the last one, you can see that Jenny has now got an extra I in her name. These, again, you know, would have been very difficult to spot. I think with people working from home at the moment, the stress of kids, homeschooling, juggling this work-life balance, it's easy to rush or be distracted and miss these little nuances. Next slide, please. So I just wanted to show you how easy it is to actually spoof a well-known domain name. So on the left are the correct ones. On the right are the ones that you can purchase. I looked these up on GoDaddy, and I can buy these from as little as 84p. And I think you'll be able to see, you know, some of these you probably get fooled pretty easily. I think especially ones where, say for instance, the NSPCC, where you've got ones in capitals, if you just saw that, you wouldn't necessarily look at that extension. Next slide, please. I'm often asked how fraudsters spoof telephone numbers. And so I'm now going to reveal all. It is actually via an app. Now, both these companies, Spooftel and Spoofcard, they offer a service which can actually hide your telephone number. There are more companies out there, but these are the ones that I've chosen because they're the most prominent ones in the market at the moment. So on the screen on the left, hopefully you can see that under the Spooftel, you can see that you can enter the details of who you want to call and what you want to display at the other end. On top of that service, they also offer additional services where you can even change the pitch of your voice. Higher for more feminine, lower for more masculine. You can even add background noises in, like at a train station. You can also even spoof a text message. So, has anyone here received a text message allegedly from their bank? I know I have. Thankfully, I knew it was spoofed. Payment for this service can also be made via cryptocurrency. And this ensures that the fraudsters are not traceable. Next slide, please. So here are two examples of, one is a payment diversion fraud and one is a CEO fraud. So the one on the left, I'll just take you very quickly through it. Red Kite Housing, they said that this is the payment diversion fraud. They said that the criminals mimicked the domain and email details of known contacts that were providing services to Red Kite. They recreated an email thread that misled those who were copied into the email that it was actually a genuine follow-up to an existing conversation for the change in the bank account details. And therefore, the verification process was probably not followed correctly due to that thread. And they lost just under £1 million because of this. You can see that there was a process in place to actually verify that, but it wasn't done. The example on the right is a CEO fraud. Fraudsters impersonated the CEO of the County Council, Jacky Maguire. They contacted a junior staff member, pretending to be her, and requested the transfer of €4.3 million to an account in Hong Kong. Now, firstly, for me, that probably should have been a red flag for that amount of money to be going out. The transfer was actually done, However, it was detected before the funds cleared, as it generally takes between 3 to 5 working days for an overseas payment to clear. And so the money was frozen and subsequently recovered. Next slide, please. The emerging threat. Here's a new one. AI voice impersonation. I think the media sometimes refer to it as deep fake. This is where genuine recordings of people are processed and manipulated via artificial intelligence. The software is readily available, and for ones like Beidou, which was created in China, it can mimic a voice in under 1 minute. So in essence, just using less than 1 minute of somebody's voice. Some need a little bit longer, like a few minutes. And there's a software called Lyrebird out there that takes a few minutes to mimic. Now think about the top execs that you've got that could be given presentations at conferences or interviews for radio or TV, with a lot of them either readily available on YouTube or even on your own websites. Next slide, please. So here are a few prevention tips to ensure you don't fall foul to CEO or payment diversion fraud. Understand your risks. If you don't understand what the current threats are, how can you put controls in place? Make sure your staff are aware of them. If they're not aware, how can you expect them to be looking out for them, looking out for the red flags? Ensure you've got a manageable process for all transactions. This is, in essence, your 4 eyes check, especially on the larger value payments. Any static data change, which includes a bank account, there should be a procedure to check via a different channel. So if something comes in via email, you contact that person by phone or even by post. But it's not just about a bank account as well. You may find that what's been happening in a lot of the banking industry is that people come on, change the mobile number first, then wait a couple of weeks, and then they'll come in and change the bank account. And then when you go to do that check via a different channel, you're actually ringing a fraudster. So make sure that there is not any changes in quick succession as well. Also, ensure policy adherence. So as I said on the previous example, you know, they didn't adhere to the policy and they lost just under £1 million. So you may want to consider spot checks, you know, possible assurance testing, and make sure it's included in your audits. Next slide, please. So I'll now move on to internal fraud, which I think currently, due to COVID restrictions of people working from home, has actually increased. So I'm not going to read out all the slide, but I think I'll just point out the key points. Employee fraud accounted for the highest level of fraud losses, and also the highest percentage of insider fraud was due to trust. Employees are costs, and charities obviously wish to ensure they have as low cost as possible so those in need benefit. However, there is really a balance that has to be made, as the consequences, apart from reputational damage, can also be loss of funding. Next slide, please. Common methods of internal fraud are employees altering recipient bank account details to divert payments to accounts they control, fabricating false invoices for payment where the money is sent to an account they control. I mean, this doesn't have to be in their name. It could be, you know, a friend's name, you know, a relative's name, you know. So again, you know, it's you've got to make sure that even though it isn't in their name, you don't discount that they've been participating in it. There's payroll fraud, you know, whether this is, you know, fabricated overtime or a complete phantom person, or just keeping someone on the payroll who's left but pocketing their money. And expense fraud, and obviously I won't go into detail about it. I think everyone knows what expense fraud is. Next slide, please. some of the common red flags to look out for. Generally, it's extremes. Living beyond your means. You know, you may find that they're coming in designer wear. You know, they've got all of a sudden got a brand new car. They're going on expensive holidays. Or it could be that all of a sudden, you know, they keep complaining about that they haven't got any money. They're going through a really expensive divorce. They've got family problems. Or they could also have a close association with a vendor or a customer. And that might be where they're putting through false invoices and splitting the difference. They could be controlling and protective of their responsibilities, unwilling to share duties because they may be scared they're going to get found out. They also could be very defensive or suspicious. And in a lot of examples that I've seen and worked on, there have been addiction problems. And this does drive a lot of the internal fraud. Do they take a lot of time off? Do they only take a day here and a day there, and they never take a chunk of holiday? They never take a 2-week leave. They don't want to leave their systems open for anyone else to have a look at. Are they still accessing systems remotely while on leave? Yeah, are they going in at odd times? I mean, do you look at any of this? Are there any flags that your IT department have got in place that can flag this to you? And again, the social isolation. I think this is mainly because they're scared to talk in case they let something slip. Next slide, please. So what I'll do, I'll just take you through a few examples that have been in the media. I mean, in the majority of these cases, you'll find that they were committed over, you know, a fair period of time. I mean, sometimes years. As generally an employee will start small, then they'll gain confidence, and then the payment amounts get larger and larger. It's this greed that generally gets them found out. So on example one, this hits a couple of the common methods that I've already mentioned. Amending the recipient bank account details and also fabricating invoices. However, in order to evade detection, she used colleagues' email login details. And it wasn't just a single colleague either. It was multiple colleagues. In example 2, this is payroll fraud. Booth was paying current and former staff members. Now, she'd been doing this for 7 years. And she'd been working at the company for 33 years. Trusted. Not someone you'd look at and label fraudster. I hear this a lot. Oh, it can't be her. She's so lovely. Oh, she's so sweet. She's so kind. She's so gentle. Believe me, they come in all different shapes and sizes. And the third example on this slide, again, this fraud was perpetrated over a number of years. This was approximately 8 years. And again, it worked at the charity for a considerable period, 21 years. Trusted, long-standing employee. Now, this was an expenses fraud, and people think of expenses fraud as being low value, but it can really accumulate. And you can see that he was ordered to pay back £141,000 to the charity. Now, please note that following his arrest, the hospice advised that donations fell by about £100,000. And staff and volunteers were verbally abused by members of the public. So you can see there are huge knock-on effects from these. Next slide, please. Example 1 on this slide relates to a CEO who lived an extravagant lifestyle. He was already on a good salary. He was getting paid just under £6,000 per month, but obviously that wasn't enough for him. He'd been with the charity for 21 years. He provided false invoices for cheques to be raised that were payable again to accounts he controlled, but he also awarded himself bonuses and pension top-ups. And the knock-on effect of this was that there were 6 redundancies, 4 staff were put on reduced hours, but asked to take on more workload, and there was a slump in donations. And the final example that I've got, again, login details of other members of staff used to cover their tracks. What I want to point out is that having interviewed people who are accused of wrongdoing because it is their login details and they've not committed any crime due to deception of others, it is extremely distressing for them because they are absolutely innocent. So Kim Bruce was ordered to repay £1, having stolen 47,000, as she allegedly had no assets. And she did not steal just from one charity, but 2 charities. She was employed at one, stole from them, left to go to another, and then carried on a little crime spree. Next slide, please. So I've outlined some fraud prevention advice in order to stop you becoming the next example of my slides. So I'll just take you through a few of them. Whistleblower facilities. It's always make sure that there is that facility there for people to let you know of uncertainties or something out of the ordinary, and the fact that they can do it anonymously. Monitoring and alerting of audit logs, transaction logs, access. Again, access out of hours. Are people going on, changing bank account details and then switching them back again? It's these types of things that you probably need to say, right, can my IT department set me up an alert so that I can get alerted to this type of stuff? And again, investigate budget anomalies. There will always be a budget for, say, for instance, IT. Why has it gone over? Is it because there's been false invoices been put in under that particular cost centre? Review of privileges or access controls for what I call toxic combinations. Now, a toxic combination will be where somebody can, say, for instance, do a payment and authorise it at the same, all in one go. Ultimately, they don't need anybody's approval. They can input it, they can approve the supplier, they can put it through, and absolutely nobody will notice. You need regular policy and procedure reviews. Ultimately, I think you'll find that there may be changes in the bank procedures, and again, you need to make sure that these are all in your policy and procedures. Review your fraud risk assessments, especially where IT or procedure changes are implemented, as well as doing them on a regular basis. We suggest annually. You probably need an alert for new suppliers to ensure that due diligence is actually being conducted correctly as well. You might find that you might get a brand new supplier that comes in, they've only just been set up on company's house. Why all of a sudden are we using them? Who's authorised it? Make sure that the approval's in place. Employee vetting procedures. Do make sure that you actually get from HR some form of okay from them. Ultimately, it's quite easy for people to provide, this was my boss at XYZ company, but they don't know that person's been stealing. They don't know, they know them as a friend and they don't necessarily know them as a worker. HR will probably know a lot more about if there've been any concerns. So make sure you get it from HR. And then monitor changes in employee behaviour. Again, the red flags list that I mentioned earlier, are people constantly coming out going, I need more overtime, I need a pay rise. Is there an urgency behind it? What is the problem? Does it look like they've got addiction problems? So I trust that I've given you some tips to take back with you. Hopefully these are already implemented in your business. And I think we're going to be taking questions at the end. Okay, thank you.
Thank you for tuning in. I am the charity director for Ecclesiastical, so I'm kind of like the linchpin between the actual sort of insurance covers and what's going on in the sector. So hopefully today we can sort of clarify what the covers are, where they are, and all the rest of it. As you will see from my slide, there is a bit of a reference to probably the most high-profile alleged fraud at the minute with Mr. Trump and Don't Steal the Vote. I thought I'd stick that in there. If nothing else, I find the fact that people will defraud a charity massively depressing. And I thought we might just want to lighten the mood after Jacky's examples. But don't forget Jacky's examples, because we really do need to focus on this. I think the other thing was, and it's a similar theme to what Jacky said before, is don't forget it, whether the fraud has occurred or not, even if there's allegations or alleged fraud, or people have the impression that there's fraud going on, that can be as equally as damaging. So prevention's better than cure, and having those policies and procedures in place that Jacky mentioned. Insurance should really be seen as your fallback position and the safety net if things go wrong. Okay, but I really just want to stress that sometimes it's not what actually happens; it's what people perceive to have happened. Okay, if we go to the next slide, we'll just sort of high level, and this is very high level. When I talk about fraud, whether it be internal, external, I'll walk you through, but the main areas are money, fidelity, and as you probably guess, it'd be cyber crime as well, because that tends to be the way the world's going. Cyber is a great environment because you don't actually have to physically be at the point of danger. From a criminal's perspective, you don't have to you don't have to walk into a premises, you don't have to be seen or caught on CCTV. You can be this completely anonymous person somewhere in the dark net operating in that means. Okay, so we will walk through those covers. They're probably the main covers, but it's just to make you aware that you can buy a standalone crime policy as well. And what the crime policy is probably the best way of describing is what it's doing is picking up elements of the three other covers and packaging them together as just a sort of standalone individual crime policy. So it's just dealing very specifically with that area. I will go on, once we've covered those areas, I will go on to talk about the fallout, because as in the hospice that Jacky talked about, there is potential for fallout. It's not just necessarily about the financial impact. There can be other impacts, and that might draw in covers for things like reputational risk and trustees' indemnity or trustees' liability. Okay, so we go on to the next slide, and we'll start with money. Now, as you might guess from the pictures, money is, I'm getting old. Money sort of begins to feel a bit old-fashioned, and I mean hard cash. This probably sort of harks back to more cover around the traditional, as I've got there, the Bonnie and Clyde, the Hatton Garden. It tends to be more about either physically breaking in or physically attacking a building, or physical in the sense of with menace, holding up premises and the likes. I think it's quite, it does have elements of fraud, which I will come on to, but the covers are there for the more traditional theft, and it is quite flexible because you can change it for what theft are going to happen during business hours. Tends to be more the hold up risk. Outside business hour tends to be more physical attack on a building and it's safe, and also getting money to and from premises. Most covers will also give you slightly increased limits for fundraising events. So rather than having to phone people like Jonathan at your brokers and say, I'm having an event, I need more money covered, they will give you automatic cover there. And they will also provide sort of like personal accident cover. If you should, very unfortunately, be caught up in a sort of physical attack or attack and grab cash and run sort of scenario, it will actually provide sort of personal accident cover there. Okay, but from the fraud element, there will be cover for credit card fraud, and obviously credit card fraud will be the organisation's credit card, so it will be an internal fraud. I think what I would say about this is that the money section is quite traditional, so the credit card has sort of come later, so it does only provide limited cover. You'd only probably get a couple of £1,000 per transaction on the credit card. So, you know, it's a good product. You do need it if you're dealing cash. It's just to make you aware that you might expect a money cover to pick up sort of money fraud. It's just to make you aware that it's not. With regards to the physical cash, you know, the conditions on the policies will relate to security, quite obviously. So what do you do with your keys? Do you remove them from the premises? Certain safes are basically built to withstand an attack, and they are actually tested. And different safes have different limits, so it's about understanding how much cash can you put in any specific safe so you don't breach the condition on the policy. And likewise, traditional money tends to be most exposed when you're getting it from your premises to the bank, and therefore there's escorting conditions. So a number of people, different routes, different times of the day, and all the rest of it. I think I used to be sort of more a surveyor on the ground, and I'm probably showing my age. One of my customers sort of was at the early stage of pre-cut veg. And because they were at the forefront of it and knew at market entry, they actually were making a hell of a lot of money. And it was a family-owned business and still dealing in cash, quite traditional in their approach. And they sent the granddad who set up the business originally. Granddad took tens of thousands of pounds of cash to the bank on a weekly basis. So, you know, don't do that. That's not a good idea. Okay, we move on to the next slide. This is now we're really getting into it. This is the internal fraud. We tend to be referred to as a fidelity guarantee. And fidelity guarantee, you know, flip on its head. Simplistically, it's an insurance policy that guarantees the honesty of your employees. So internal fraud, very much driven. I would massively back up what Jacky was speaking about earlier. What we tend to see is we don't tend to see these claims that often, but when we do see them, they tend to be really big, because what they've been doing is they've been going on over a very long, protracted period of time. So it all starts to mount up. I think the other thing that I would sort of say as well is that I do have a sneaking suspicion that this is an underreported crime and an underclaimed crime as well, because I think the reputational issues that can be associated with this, I think some people, depending upon the value that's been lost, sort of err on the side of public relations and sort of say we don't really want to come clean about this. We'd rather just sort of keep it quiet and move on with our life and learn from our lessons. The cover does actually extend. It's not just pure money. It does extend to goods. So it could be stock that's been sort of taken out the back door by employees, and again, it's a very flexible cover, because you can choose how you arrange the cover and set varying limits for, you know, is it just employees, volunteers, you know, and is it named employees or named volunteers, and you can end up with quite a combination and variable limits for each sort of group that you choose. So it does provide a lot of flexibility. I think the thing that you need to know about this cover in general is that if you suspect something is going on, or something's not right, or you actually discover an internal fraud, speak to your broker, speak to your insurer as soon as possible, because the cover stops as soon as it's discoverable. So if you sort of have a suspicion, but you don't actually speak to your broker, but you allow it to go on, so you don't think. The problem is you sort of, from the insurer's viewpoint as well, you had a suspicion, but you didn't really do anything about it. So we will only pay the claim from that point back in time. So the sooner you speak to your insurer and broker, the better. It does exclude shortage or shrinkage is what I'd probably hear about it in the retail trade more often, but you know, you can't just do a stock take at the end of the year and say, well, we should have this, but we're short, so we'll just claim. That it's not designed for that kind of cover. It's got to be tied to a specific event, specific individual, specific activity. Okay. The conditions are very, as you'd understand, this is quite high stakes cover. Internal fraud's probably got more potential to steal than an external fraud in many respects, because they're already inside the organization. A lot of the checks and balances have already been, aren't applied to them because they're an employee, not someone outside. And those conditions will be written into the policy, and you need to make sure that you understand them and you comply with them. But to be honest, they're all the things that Jacky talked about is good standard practice when it comes to sort of internal audit and credit control. So take references. The policy actually says that they've got to take holidays. Now, we do quite often get asked about this. When we say holidays, we mean at least different duties. And splitting responsibilities and the various things they're on. You can read, I'm not going to read them all, but it's the auditing and controls, okay? So that's fidelity. Moving on to cyber. Cyber, the first thing I'd say about this is you could buy a cyber policy, but it might not have cyber crime. The first thing is to make sure that you buy cyber crime insurance, and obviously this is aimed at external fraud, predominantly because that is the way that criminals are operating now, is electronically. Okay, so you might have a cyber policy, but it might not include cyber crime. So that's the first thing to check. It is actually very wide cover, I would say. It's anything that's electronically enabled, so it's electronically enabled crime. It has conditions, but not the kind of conditions we've just talked about in fidelity. And the conditions are a lot more flexible, I would say. The mandate fraud that Jacky talked about earlier, that if that mandate fraud's done via emails, as Jacky alluded to, then that would be electronically enabled, and that would be picked up by a cyber crime. Okay, it covers, as it says there, quite a wide variety of things. Everybody thinks about the money transfer or the mandate fraud, but there are other things in there as well. So it could be a transfer of services, property, financial financial benefit, as well as credit arrangements made fraudulently in your name. And the other one that we see quite a lot is also the sort of hijacking of your telephone system, and then the criminals will use your phone system to basically run what they would perceive as their business, and rack up very high phone costs, which you're left to pay the damages for. The last bit, I think, is the sort of underplayed bit in some respects. Everybody wants, when you talk about insurance, everybody wants to know about what you're going to pay, how much money am I going to get? I think with the cyber policy as well, is equally important is specialist support and services. So you will get access to specialists that can help detect, stop, and repair any damage that the attack is, the attack on your IT system. And it can also help you with stopping them sort of publishing data that they've stolen, or fraudulent malicious use. Now, again, most organisations don't have highly specialised IT people that can deal with these kinds of attacks, a DOS attack or a DDoS attack. Therefore, access to these will, at that point, when everything is falling down around you, access to their services will, I suggest, would be invaluable. Okay. Now, you probably heard a lot about
Angus, we've just lost your audio there, Angus.
Where it's time to drop a poll. Do you think it is morally right that insurers should pay blackmail, ransomware, malware ransoms? Do you think that's right? And will it just, or do you think it's wrong? And there's a lot of debate in this area, and the debate usually revolves around that by paying, are you just perpetuating the problem? Or are you just you need to be a bit more selfish in some respects and just make sure that your organisation's all right? Because that's the one thing that you do see in this area, is that once you're attacked once, you're probably likely to be attacked more often. Okay. All right, we will get the results of that poll a bit later on. So that's fine.
There you go, Angus. I can share them with
Oh,
you.
right. Oh, instantaneous. All right. Wow. Well, it's quite strong on the nose, which is very interesting. Right. Okay, that's interesting. And then, so a third undecided, but very few yeses. All right. Okay. Well, maybe you can pick that up in the Q&A session at the end. But that is interesting. Quite strong in one way, but not the other. Okay. Other things that you need to know about is that for the cybercrime cover, they do expect that you keep your hardware up to date, you maintain it, you inspect it, you keep your software up to date, and you keep all the antivirus software up to date as well, and that you do backups. Okay, quite straightforward standard things that you probably should be doing anyway. Jacky's mentioned a few, but there is a link on the slide which you can get copies of at the end, which is a classic mandate fraud. The one thing that I would add to what Jacky, and I'm speaking as an insurer, is what we usually find is that the charity's getting some building work done, and what they do is they spoof that building contractor. That happens quite regularly. Okay. The last slide is this other bit, the fallout. Okay. I think the thing to be aware is that if fraud's occurred, you might end up getting investigated by the Charity Commission. Think about how your employees and volunteers feel, how your beneficiaries feel, how your funders are going to feel. You know, you might actually come under a lot of flack for what's happened, and that might mean that people actually take action against the trustee individually. And obviously, trustees' liability insurance provides that financial protection to the trustee who may be personally liable for paying any damages. Okay, so that is a fallout. And the other one's a reputational risk. Again, how do we deal with this? How do we deal with the press? How do we manage this situation? We provide sort of two themes on this. We provide a free sort of half-hour consultancy with a PR company that you can phone up. But that might not be enough due to your organisation, what you do, where you work and how you operate. You can buy reputational risk cover that will give you sort of cover up to X amount to use the services of PR media firms to manage the situation. What it would have to be, though, is it would have to be linked to another claims, usually under trustees' liability, and dealing with that. But some markets do provide it separately.
Angus was obviously talking there predominantly from an ecclesiastical point of view. Many of the topics covered are pretty similar for a lot of insurers, but just to caveat, some policies will be different. So we can circulate the slides afterwards. But just do bear in mind, if you insure with another insurer, your policy might be slightly different, albeit the premise is generally the same. The ransomware is a very interesting topic. Because a lot of the policies are written by American insurers generally, which generally means that some of the wording is written for the American market. So interestingly enough, some of the policies that are out there will cover you for fines and ransomware, because some states in America it's legal to cover the fines and to cover ransomware, whereas obviously in the UK, any fine that you received for loss of data, for example, is not insurable, but isn't at present anyway. And ransomware, generally, insurers look to steer away from paying those ransoms, albeit different insurers have different processes. Sometimes they look at it economically, which is the cheapest way to end the matter. So thanks, Angus. I'm just going to sort of jot through now. Angus has given me some detail around cover. I want to bring that a bit broader and talk to you a bit about the market landscape at the moment. So Jacky sort of covered off what is the risk. Angus has talked a bit about how you can insure against it. I'm going to pull that to sort of the insurance landscape to talk about what's going on in the market at the moment, and some things to give you thought, to leave you to think about and perhaps go and reflect on. So in terms of COVID, how's COVID affected insurance? We couldn't have a presentation without talking about COVID. Apologies, the dreaded C word. So just to give you a steer, some of the figures that are bounded about at the moment, the understanding is it's £200 billion losses for the insurance industry. I think that will even increase further, bearing in mind the recent FCA ruling. So for those of you who don't know, a number of insurers challenged through the courts they shouldn't be liable to pay for COVID losses under the business interruption policies. that went to the Court of Appeal and they lost. So the FCA, the regulator, put a test case for the sort of, I think it was 7 or 8 insurers testing their wording, and unfortunately, fortunately for clients, unfortunately for the insurers, that went in favour of the clients. But what that has meant is that the floodgates are potentially open for a number of claims. Which will have a knock-on effect in terms of premium and cover, irrelevant if you've made a claim or not, because of the sort of the vast magnitude of the issue there. So what does that mean for you guys as an organisation? And it doesn't matter whether you're a charity, a school, a care organisation, or running a different type of commercial organisation. The insurance market, we are at the start probably cantering through a hard market. So whichever sector you're in, you will start to see, as you come to renewal, increases in premium potentially, reduction in cover. So I'm not going to talk to you about everything through this slide, but I just thought this is quite an interesting slide and explains the process of a hard market. Where we're at the moment is insurers, their capacity has been reduced. I think that where we are now has probably moved up almost to the next box actually over the last couple of weeks. But we are seeing reductions in cover, we are seeing increases in premium, and one of the main triggers of that is insurers buy what's called reinsurance. So they take some of the risk on themselves and then they'll pay for their own insurance to reinsure that. As they're going through these reinsurance treaties or negotiations, they're seeing increases in premium and reduction in cover. And unfortunately for you guys as clients, that rolls downhill and then the insurers will pass on those restrictions and premium increases or a mixture of both come renewal. Depending which sector you're in will depend on how severe that might look. So if you are working in a care sector, for example, you're probably more vulnerable and more susceptible to cover restrictions. So one of the main examples we're seeing there is a restriction on the public liability for COVID. So I would urge you to review come renewal, or if you've just recently gone through renewal, just to check if that's changed from your insurer and you're being covered for COVID. So we are starting to see some claims coming through where claimants are saying they caught COVID as a result of the negligence of that organisation, especially in the care side of things. If you've got say an elderly service user that's not seeing family or friends for whatever reason, they've only seen one of your carers, for example, that could put you at high risk that if they've caught COVID, it could be pinpointed down to a carer attending their property, and then they've contracted COVID and God forbid anything awful happen. So we are starting to see some of those claims coming through. You might sit there thinking, how the hell can they prove that? That's a joke. Completely agree. But I suppose twofold. One is we are seeing the, as I call them, ambulance chasing type law firms setting up and really focusing and aggressively looking for potential claimants on a no-win, no-fee basis. And secondly, irrelevant of if you think you are negligent, if a claim does arise, there's every chance until there's a test case gone to court that you will have some legal defence costs, whether that's quite small for your insurer or you get appointed to a panel solicitor, or if unfortunately it does go to court. So it's a very real risk, and probably 90% of insurers are looking to mitigate that risk and reduce that from your cover. So it's a real risk that I would really urge you to review and make sure you understand. Depending on your organisation will depend on your risk appetite and tolerance for that particular risk though. But I will share this slide with you and send it across so you can have a thorough look through that. So just to bring that to life, just to bring up to life what I just said. So this is an example of an email we received a couple of months ago around how a particular insurer, a global insurer that probably every single broker in the land would do business with, and they sent this email in this particular section to every single broker they do business with. So it doesn't matter if it's a national broker, a small independent, or anyone in between. So as you can see there, there's huge differences in the premiums charged, there's huge differences in the cover and the excesses, sort of the perfect negative storm for everyone involved. And this is accelerating vastly. Depending on the sector you're in, the appetite from insurers to write risks has reduced as well. And that's particularly in the crime and the cyber element of things. We are seeing, because we've got people working at home, a big increase in incidents and claims. There is a spike. Cyber criminals are not on furlough. They are actively looking. So you might have seen a hoo-ha at the start of the first lockdown where everyone was panicking on Zoom because people were being hacked in. So things like using these platforms, if you don't have a registration process or private rooms, and you're talking about personal data, for example, it's a real risk that some of that information could be taken or used against you. But we are seeing a lot of that. So whereas perhaps people in the office will have a different, more professional approach, sometimes those things are slacking slightly at the moment. If you bear in mind people's mental health has probably taken a bit of a battering, I think all of us have probably had enough in some way, shape or form, whichever way it's fallen in our life at present. So I think the main thing to take away is just understanding what you're covered for. So Jacky spoke about some of the risks, and I think one of the main things that I took away from that is, do you really understand what your risks are? I speak to a lot of clients that always tell me, yeah, we're fine, we've got an external support, or it's just me that signs that off, or the person in our finance department's been here 20 years, we trust her explicitly. That's all great. Those time and time again, and the clients where the incidents will happen. People are busy, people are extremely busy, people are at home, they've got their kids, animals, etc. in the background. Their mental health might not quite be as strong as it would normally be. We are seeing mistakes happen. So the two incidents we've seen recently, one of them in particular is a client of mine, was no malice involved. It was an innocent mistake by an employee, and a hacker had sat on their system for a period of time, infiltrated that, and if you looked at the emails, unless you really looked into detail and really followed the process to a T, you wouldn't have noticed. And it was only because the bank picked up and they were £100,000 out of pocket. So it's really important you understand how your cover plays. We have had some instances recently where clients haven't had the cover in place, unfortunately, and it's really difficult to then go to insurers to find that cover if you haven't explicitly got crime or cyber. So it isn't the cheapest insurance, and with the current market and the current claims volume, that's going the wrong way, unfortunately. But it's really important you've got to understand your risk appetite. So if you're not purchasing insurance, do you understand what that risk is? Have you got a real clear process to mitigate that risk and stop that happening, especially when you're working from home? So Jacky alluded to, is it a manageable process? Have you got 4 eyes? Is some of those processes slipping? Have you got a process for the red flags? So we are seeing a lot of that. So it's really important you understand that. And if you're using external suppliers for your IT, for example, what's in that contract with that external supplier? We see time and time again when we review contracts, these IT companies are very clever at limiting their liability, and it might be in the small print. You might have signed your life away to say we'll deal with you on a retainer basis, and actually they're limiting their own liability to a nominal value, even if it's their fault that your data is lost, for example. So it's really important to understand that. That doesn't necessarily mean you need to go and rush out and all buy lots more insurance, but it's important that you understand the risk, you're managing that risk, and if you want to involve that in risk transfer with insurance, make sure you speak to your broker to do that. So it's really important at the moment. And what that does mean, unfortunately, in a time where money might be tight and profitability for some of you might be taking a hit, depending on which sector you're in, is understanding your balance in that price versus quality. I've been speaking to a whole load of potential clients and existing clients at the moment, some of whom wouldn't probably have planned to go through a full-blown review exercise. They would like to have just rolled their insurance over and move on to the next battle and fight the next fire. Unfortunately, if you're ever going to take some time out to review insurance, as expert as you are, as little time as you've got this year, I would stress that this is the year to do it. Whether that's with your existing broker or you want to go out to the market and talk to a couple of other brokers, I definitely would advise you to understand your risk and make sure, as a minimum, your brokers advising you what cover you've got, and are you with the best insurer at the moment and getting the best cover. That doesn't necessarily mean you need to pay a load more money or buy a load more insurance, but it's just really important. I suppose what I call it is behind the covering. So can you articulate to your board what cover you've got, what's the risks, what's the potential gaps in risks, so what's the risk to the organisation. So I find a lot of the time that hasn't necessarily been fully articulated to the board. So when an incident happens and there's a gap and you haven't got cover, that does roll downhill. So I think it's important, if some of you guys are responsible for the risk of insurance program, you understand that. For anyone that's a client or a non-client, more than happy to talk to you about that. Even if you just want us to have a little look at your crime risk, we're more than happy to do that, and we do that on a pro bono basis just to offer some general advice around what your cover is and where the gaps might be. Generally, even if you tell us which insurer you're with and what policy it is, we can probably tell you pretty much off the bat where your gaps might be and what to look out for. So very keen to answer some of your questions. So we're just coming up to 4:10. So we did allow an hour and a half. So I have got one question here, which I'll just read out. So I think this is probably one for you, Jacky. So I'm not sure if you can see the screen, but I think the question is, there's lots of people working remotely from home with particular challenges, and probably until at least the end of this year, perhaps even further than that. I can personally see that there'll be a definite change in working from home attitudes from various organisations. But what tips have you got, Jacky, in terms of looking out for these red flags? Is there any particular tips that you find work?
Well, it's difficult really for identifying the red flags, because obviously a lot of the time you're wanting to look at the people that are there, but it might be that you know, while they do have kids, that their pattern of work changes, but people do get into a pattern. So if you are seeing random logins for a very short periods of time, for instance, that might be a red flag. I mean, you know, we're not just talking about like the working from home and the internal fraud. It could be, as you were also saying, about malware. So somebody could have had a bit of malware on their system, and that person now has access to their computer, and they would be doing it all random times of the night, basically, when they know that that person will not be on there. So I think that's obviously something that you potentially could look out for. It might also be changes in the way that people are actually emailing, their tone in their emails. I think from that you can potentially get quite a lot. People can, you know, while if they're stressed, you know, if they've got too much on, things get very short, and that's probably where sloppy mistakes happen. You know, mistakes happen to everybody, but sometimes if you're overworked or you've got so many distractions going on, you know, you're potentially caring for others, that's the time when, you know, you might see that change in behaviour on the email. Again, if you are looking at doing sort of Zoom or Teams, at least this way then you can actually see that person, and it might be that you see that they've got you know, a very nice house on a £10,000 salary, or some very posh things. Who knows? But I think, you know, just bearing in mind about that people, you know, from an internal point of view, if they're worried about their jobs, they might start thinking, well, actually, somebody's just approached me and said that if I give them my login details, they'll pay me, you know, £500. I could do with that £500. What harm can it do? And again, you know, we are seeing these approaches. I think there was a really massive data breach, and Sage, there was a woman from Sage, she sold her login details. And I think that's, again, you know, people in these uncertain times, they worry about their jobs, they worry about money, they could have a partner on furlough, and they just get sucked into it a little bit.
I think the other thing, the other example was the Morrison's example, Jacky, where a member of staff was let go. They weren't particularly impressed they were let go, and they posted a whole load of employee payroll details on the dark web. I can't remember if they sold that for money or it was just vindictive, probably both. And that was a huge case that has been rumbling on in court over the last 18 to 24 months. So I think, yeah, if you've got a member of staff that's left in a disgruntled fashion, again, that are no longer in a position of authority or had access to data, especially when they're now working from home, so they could quite easily print off, copy, write down, whatever it might be. I'd say from experience, that's another red flag as well. I'm sure you'd agree there, Jacky.
Yeah, absolutely.
Cool. Okay, there's another question there in the chat, which is great. So if funds are diverted, say overseas, is it possible to track trace where these have gone? who would do this and what recourse does the victim have. So I think if I answer high level, and then I'll pass the hospital pass over to Jacky. From experience, these cyber criminals are extremely clever, and they'll bounce their IP address all around the world. So it's not quite as clear as it's gone from Angus's bank to John's bank. We can see he's done that. It's obviously John. We can go in his bank, get the money back and pass it back to Angus. Generally, it's bouncing all around the world, and it's impossible to track. So normally, once those funds have left your bank, the bank struggles to get that money back, no matter how quickly you contact them. Generally, if you're with a reputable bank, they're pretty hot on that, and they're looking out for sort of transfers that don't make sense or are going to accounts they don't recognise. In terms of what recourse you've got, if you've got a cyber crime policy or a good, well-written crime policy, depending on the incident, that policy could cover you and could give you recourse and reimburse you for those losses. If you haven't got a crime policy or a cyber crime policy, unfortunately, that would be a loss that your organisation would need to suffer. So that's why, I suppose, going back to my point, is really understanding what cover you've got in place and where any gaps might be. So yeah, Jacky, you're probably more of an expert on that matter than me. So if I've missed any detail out or you want to elaborate, please do.
Yeah. I think what you'll find is that obviously if it's the UK bank to bank, obviously we've got faster payments in and it's in the account straight away. Once it's basically gone round, say, 3 to 4 different banks, that's it, the money will be gone. When you talk about overseas, if you act quickly and find it quickly, like in the example, then they can do something, and they will immediately freeze the account once they understand that there is the potential that it's fraud. However, say for instance the example that I stated, the Hong Kong one, that money would have gone straight out to China, and there are certain countries where you just cannot get any money back. So again, it will depend on what country it's gone to. And again, with the Hong Kong, having worked at HSBC, I do know that if the money goes into a Hong Kong account, somebody in Hong Kong has to physically go in and make a report to the police. So you can see how all the fees will actually really, really ramp up for you. So unless it's a very significant and large amount, I don't see you getting that back at all, particularly if it goes overseas, personally.
Agreed. I've not seen that from any incident we've had. Cool. So we've got another question here, which is great. Keep them coming, guys. Do you have any recommendations on how to keep employees up to date with the latest fraud trends? They could be on high alert and able to identify phishing emails instantly, for instance. So again, I think I can offer a bit of guidance here, and then perhaps Jacky, if you can jump in. So one of the things we've been doing recently with a number of clients is fish train fish as an exercise. So what that is sending out a phishing email to a limited number of staff. So generally the client will provide a list of, I don't know, say 100 people. You can pinpoint certain people if you've got concerns, or certain departments, depending on your size. Just to test back, and you can get the results from that, which will show you how many people have opened the email, how many people have clicked through, so generally attachment, and then even further than that, how many people have put in personal credentials. From that, getting a report, and then training staff, whether that's educating the board and training the masses, or doing a training session off the back of that. In every session we've run with clients on that, it is very scary, the amount of people that will click through and put personal credentials on what I would consider is a pretty bloody obvious phishing email. But that's perhaps because I work in the industry I work in, and it's hammered into me every day. Other people aren't as strong at looking out for those areas and those sort of scams. And if you've not been privy to that, if you're not IT savvy, for example, which many employees aren't, we've got many of them in our organisation, we've had to educate ourselves. So I think that kind of exercise can be good for a benchmark, but it is all down to constant education. But Jacky, you might have some more to add on that.
Well, mainly just the fact that obviously when, from a personal point of view, when it comes to my own email account, I can instantly see it they don't have the incorrect spellings or anything like that anymore. They're generally pretty good at that. But it really is about clicking on the top bar just to see, or even if you try to do a reply, you should be able to see what the actual email address you can go back to, so that you can understand that it's not the one they're actually showing. And also, you'll find that it generally doesn't have your name on it. You know, a lot of these say, "Dear customer," "Dear madam," "Dear sir," you know, or just "Hi." So again, look out for those that that aren't actually addressing you correctly. I think the other way to stay up to date with the latest fraud trends as well is obviously to attend things like this, so that you can actually take them back and feed this back, make sure it gets fed back to your employees, to the whole of the company. Obviously, Action Fraud do put things out as well, so it might be worth just checking their websites every now and then. And just making sure that you read the media. I mean, just doing a Google search and putting fraud in, or even just putting, you know, whichever company you're from, whether it's, you know, care fraud, whether it's charity fraud, you'll start seeing examples pop up. And then from them, you can actually see, oh, well, actually, that's how they're doing that. Oh, we haven't got that control in place. Let's make sure that we've got that control in place. Or if you can't put a control in place because you can't for everything, make sure that there is monitoring, whether it's ongoing monitoring or it's periodic monitoring. But you do have to make sure that you do monitoring where you cannot put a control in.
Great, yeah. So I suppose just to close that off, if you've got cyber insurance, the cyber insurers or crime insurers will work with a number of suppliers. So if an incident was to happen, they'll call in various people, from forensic guys to PR guys. So a number of those will have organisations which can do those exercises, or they can offer training or support. Some of the time insurers will do that as part of a bursary, or your main insurer might cover that as part of a bursary, because the idea is to improve your risk. So again, if you've got any particular requirements, wanted to chat a little further about that, myself and Howard are quite well versed on that, and we've got plenty of examples. So yeah, please do contact us. We've got a number of tools, both quite simple and complex. We can offer advice on there, but I think it's just a constant education for clients. It's not something you can educate your staff on once and then just forget about it. It's got to be a constant drip feed, and they might well get a bit fed up with seeing it, but it has got to be that constant reminder, especially when you've got a lot more people working from home, I would say. Yeah. Is there any more questions that anyone's got? We've got a couple of minutes left. Has anyone got any burning questions?
Can I ask a question?
Yeah, sure.
bit left field. Jacky, how do you find it, sort of on the cultural front? So someone, you know, there's been a phishing email, they've clicked on something, but then they're concerned they're going to get in trouble, so they don't say anything. You know, do you come across that?
Yeah, we come across that all the time, actually, because, you know, they are worried that they might lose their jobs, so they keep quiet. And I think, you know, the whole point is that, you know, you have to get across that nothing's going to happen to you, that mistakes do get made, and it's only natural that at some point you will make a mistake. And that's what, you know, what John was talking about the training, the bogus phishing emails that get sent out with these links on it, they're actual training. So, you know, so the more that you can do that, the better. I mean, you know, generally most companies can tailor that email so that it is a little bit more specific, so it is a little bit harder and not so obvious. And that's what they do a lot in the larger companies now as well.
So don't just train on the phishing, spotting it, but if it goes wrong, train them on it's a safe environment to put your hand up, sort of thing.
Yeah, absolutely.
Yeah. Definitely. In my experience, in the instance I've seen, generally it's a couple of people working in cahoots as well. I've seen that in the past, because they have someone else involved to get through one of the sort of mitigation processes in the chain. So again, yeah, I've seen instances where people have trusted a number of people, and then they've gone behind the scenes. They might have started off very small. I think Jacky made a very valid point. It does tend to start off very, very small, and then builds up, and they get a bit more confident and cocky, some might say, and then they sort of go for the larger amounts, and that's when they tend to get caught. I've had a few interesting ones actually. I had one many moons ago, back in the day when I worked for Zurich, where a client, a lady stole, I think it was about £5,000. She was quite a junior member of staff. She was going through a very tough time, splitting up with her husband, very short of cash. Stayed working with the organisation. 8 years on, she worked up to the dizzy heights of FD, and then felt so guilty, she went to pay back that money, including some interest, because she felt that guilty. And then the auditor spotted when she put the money back in, and then she was caught. And then the organisation was left with that moral dilemma: what do we do, and how do we process that? They've got the money back, but do they take it to court? Do they press charges, etc.? So yeah, there's a lot of moral compass elements to it as well, we find, when it comes through. So you don't always know what's going on in people's lives behind the scenes, especially at the moment. I think the divorce stats are jumping up massively last time I looked. The jokes aside, that you don't know what's going on in people's lives. So it's worth just bearing that in mind and making sure you've got those clear processes in place. Sorry, Angus, did you have something you wanted to add?
No, it's just that dilemma of people spot things or do things, but they're scared of the consequences. In reality, usually in these instances, time is of the essence. You really need to, I've done something I probably shouldn't have. I've clicked on something, or I've just spotted that the email address isn't quite what I thought it should be. From an IT's perspective, the sooner they know, the sooner they can do something about it. Sleeping on it is not a good idea. It's too late.
I think that's valid. I think from the claims we see as innovation broking, probably 80% plus are what I call fat finger syndrome. So it's not no malice, there's no intent, it's a general mistake or just naivety. There's nothing. It tends to be more external fraud, and people aren't understanding the risk and really managing that risk. That's what we tend to see ourselves, and I think that's probably a fair assumption across the board. We have got another question here. So there's going to be more discussion regarding the poll. Particularly interested, some insurers do wish to pay the ransoms ASAP to keep costs down. So Angus, being you're calling from the insurer angle, what's the ecclesiastical view on paying a ransom?
It's excluded in our policy, and I think again, I know insurers are not everybody's cup of tea. We're not the most popular people on the planet, but I think in this instance there's very good reason. If you pay that ransom, you got to remember that from the criminal fraternity, they are running their activities as a business. So you've just paid them their reward, which they will then reinvest in their business and do more and more and more and more. So you are perpetuating the problem. The National Cybercrime Security Centre, the retired CEO of that government organisation, has recently been in the press saying, we really need to get a grip of this, because it's a global issue and we've got varying approaches. But the one thing is clear, that they're not going to go away as long as we continue to pay them. So from that point of view, I think it is. The other thing as well is that criminals talk as well. So if you do pay, you will probably find yourself on a list somewhere on the black web. There is talk about, there is lists of soft touches or easy targets and all the rest of it, and criminals will sell that kind of information to other criminals. So not only have you now funded one criminal fraternity, that criminal fraternity will have sold your details on to multiples, who will then go and target you again. So it doesn't. I don't know, Jacky. You're the ex-fraud squad individual.
Yeah. Well, recently, having had a little trawl on the dark web myself, with very, very safely via a proper company, I can tell you now that there are victim lists, and it's not just about whether you pay ransomware or not either. It's about whether you're vulnerable to fraud. So do bear that in mind. Whether you're an individual or a company, if you've got lax controls, they will come at you time and time again, but from different angles, because they know that they've been lucky once, it will happen again. So do bear that in mind.
Great, okay. Any more final questions? I think we've just got a couple of moments for our allotted time is up. Speak now or forever hold your peace. No, seriousness, if you do have any further questions, burning questions, you want to come to us afterwards, please do let us know. This will be shared, and we can circulate the slides as well if requested. And again, by way of follow-up, we have got the cyber crime insurance video, which we'll talk in a bit more detail around cover, which we can share, which is just a 5-minute short video in layman's terms. Or we're more than happy to have a more thorough review with you on what cover you've got at the moment and your particular risk yourself and where you might want to spend some time and attention on, whether that's risk management training, understanding the risk, or whether that's risk transfer with purchasing insurance. Okay, so I haven't seen any more questions pop up. So with that in mind, I'm going to call the session to a close. Thank you very much for your time. Thank you very much to Jacky for your time and input there, really useful. Thank you to Angus and Ecclesiastical for their support as always. So have a great day, stay safe, and we'll speak to you soon, guys. Take care.